How does the IRS wage garnishment work? Have you ever wondered how the Internal Revenue Service collects unpaid taxes from individuals? Understanding the process of wage garnishment can help you avoid this situation. Wage garnishment, also known as a tax levy, is a legal action where the Internal Revenue Service takes a portion of your paycheck directly from your employer to settle unpaid tax debts. Unlike other creditors, the Internal Revenue Service does not need a court order to initiate this process, which makes it more immediate. The journey to wage garnishment begins when the Internal Revenue Service sends multiple notices regarding your outstanding tax debt. These notices include warnings and a final notice of intent to levy. This final notice informs you that if the debt remains unpaid, the Internal Revenue Service will garnish your wages. After receiving this notice, you have at least 30 days to respond, appeal, or set up a payment plan. If you do not take action, the Internal Revenue Service will contact your employer to start withholding a portion of your wages. The amount withheld from your paycheck is determined by Internal Revenue Service guidelines. These guidelines are designed to ensure you still have enough income to cover basic living expenses. However, even with these protections, wage garnishment can significantly reduce your take-home pay. The garnishment will continue until your tax debt is fully paid, a payment agreement is established, or an alternative resolution, like an offer in compromise, is accepted. From the perspective of banks and credit unions, wage garnishment is important because it affects the cash flow of their customers who are employees. While the Internal Revenue Service garnishment directly involves your employer, banks can also be impacted if the Internal Revenue Service issues a bank levy. This levy freezes and seizes funds in your accounts after similar notice procedures. Banks must comply with these levies by freezing your accounts and sending the funds to the Internal Revenue Service. This can affect your ability to access your money and maintain financial stability. When it comes to managing debt and negotiating with creditors, understanding how wage garnishment works is essential. If you find yourself facing garnishment, it is important to communicate with the Internal Revenue Service as soon as possible. You can explore options like installment agreements or temporary relief statuses to avoid wage garnishment or bank levies. Banks and credit unions can support you by offering financial counseling or referrals to tax professionals who can help you manage tax debts and prevent severe collection actions. In summary, the Internal Revenue Service wage garnishment process involves formal notifications and withholding of wages after multiple warnings. It directly reduces your paycheck to pay off tax debts and can continue until the issue is resolved. Banks and credit unions play a role in this process by complying with levies and assisting customers in managing the financial impact of these actions.